From New York City for our viewers worldwide, I'm Matt Miller. Markets today wondering if AI really is going to be a revolution or if it's going to happen later on. The countdown to the open starts right now. Coming up, Micron results throwing some cold water on bullish AI bets. Hedge funds apparently aggressively cut back on tech. This according to the prime brokerage at Goldman Sachs. And debate night in Atlanta. President Biden and Donald Trump face off tonight to fight for America's vote. We begin, though, with the big issue, labor market data, raising hopes that the Fed may be able to cut rates this year.
We have a view that once they start, this is a march. They don't take a step. Once they start, they are telling you and me that they're going to have a program of rate cuts. So that's why they have a little more resistance to starting up.
Joining us now is Carol Schleif, BMO Family Office Chief Investment Officer. Carol, great to have you on the program. So much to talk about today. Let's start, though, with the Fed. Yesterday we saw the dollar rise to the highest level in 2024 on concern that the Fed may have to keep rates higher for longer in a divergence away from what's happening at the ECB and the BOE. Today, there's, again, a little more optimism, although that's based on a weaker labor market. What's your view?
Well, we definitely think the Fed should err on the side of they've already kept them higher for a lot longer than people expected. And let's start looking at some of that. You're starting to see some signs of weakness at the fringes in the labor market. It's still very healthy, but it's in a lot better balance. And we'd love to see the Fed go ahead and initiate that first cut. We don't necessarily think that then they have to cut it every single meeting after that, but they don't want to get behind the curve.
By the way, we've seen some amazingly, thin breadth, right? I mean, on Wednesday, on Tuesday, only 113 stocks gained, and that pushed the S&P to rise. Yesterday, I think it was 140 and change, and we had a gain in the S&P. Is the broadening out of, earnings and stock gains dependent on a Fed cut?
It's not dependent on a Fed cut. We actually think that broadening out we'll see the potential for that as we get earnings. We're a couple weeks away from having another earnings season. People forget how much easier the comparisons to last year are, so you should have some really good earnings coming through, and that hopefully will broaden out that rally. But for sustainability and durability, you really do need to see more participants.
All right, let's focus in on the economy right now. Bloomberg's Michael McKee standing by, Chief Economics and Policy Correspondent. We've had some data crossing in the last, let's say, 35 minutes. Mike, what did we see in terms of GDP, in terms of personal consumption? We're all focused on the consumer and the growth it provides.
Well, you mentioned the labor market. Let's start with that, because the jobless claims numbers out today don't really give the Fed a whole lot of information. They didn't change much, 233,000 down from 239,000. That leaves us in a range that we've been in for like 3-4 weeks now. The 4-week moving average, 236,000. Is that bad? Well, a year ago it was 253,000. So kind of hard to know. Durable goods orders came in a little weak. A lot of that was in equipment spending. Capital goods orders terrible, but this is a very volatile series, so we shall see. GDP revised up 1.4%, and it's kind of interesting because this durable goods orders is the opposite of GDP in the sense that GDP consumer spending was down in GDP, but business spending was up.
Still not as good, by the way. The GDP revision still not back to the first take, right? Because
still not back to the first take. However,
yeah.
Atlanta Fed GDP now still has second quarter GDP rising at a fairly high rate. Jobless claims, as I mentioned, not particularly giving us a whole lot of information. Now, I'll pull it back to what you were just asking about in terms of earnings. Is this a situation where companies are afraid of recession, so they're going to start letting people go, or are we just trimming around the edges so that as inflation comes down and the economy slows a little bit, margins can stay high? That's one of the questions the Fed is going to be asking. And we're not going to find out a whole lot until we get further data, and there is a lot of data coming up. We have the PCE inflation numbers tomorrow, of course, which are really important. But if you thought you could have July off, forget about it. On Friday of next week, we get the jobs report. Jay Powell does Humphrey Hawkins' testimony on Tuesday, July 9th and Wednesday, July 10th. The CPI comes out on July 11th. You're going to be around that week. And then on Monday, July 15th, Jay Powell goes to the Economic Club of Washington. So there is an awful lot of data ahead. And even if other Fed officials speak between now and then, it's the data and the chairman who are going to make the difference, I'm sure.
Yeah, absolutely paying attention to PCE and non-farm payrolls, but I'm glad someone else still calls it Humphrey Hawkins. I feel like I'm in good company.
We're old enough.
Mike,
we can do that.
Thanks very much for that. Let's get back to Carol Schleif here from BMO. It's a focus on AI that I really wanted to lead with, although the Fed seems to be the other big factor in the market. So that question out of the way, what do you think about? Micron came out with a forecast that apparently disappointed, although it seems like it was pretty much in line with the average. What's your take?
It's really important to remember that artificial intelligence has been around for a lot longer than ChatGPT has, that companies have been building their use cases. It takes a while to implement new technologies, so we're spending heavily, and there's this potential that it's harder on margins in the beginning until everybody figures out how to use it, how they're going to deploy it throughout. But we definitely think it's a secular trend that has legs, and there's many different knock-on effects. It's going to impact basically every industry. It's arguably one of the biggest secular trends, and a confluence between that and the infrastructure build-out to support it and other technologies. It's one of the biggest secular trends that we've seen, arguably, since we built out the interstates back in the 1950s and 60s and completely changed the composition of how we do business, because it will touch everything from healthcare to consumer services, business services, and the way we do it. But it takes a while for people to figure out how they're going to use it and how it's going to impact margins and employment and everything.
But Carol,
else.
in terms of investing right now, Micron came out last night with a fiscal fourth quarter sales forecast between $7.4 and $7.8 billion. The average analyst estimate was for 7.58, so a little bit less than the middle of that range, right? They came out with an EPS estimate of 108, and analysts were looking for 102. Do you have to knock the cover off the ball right now if you're an artificial intelligence related company?
It does seem like that's where we're at, that the expectations have been pushed so far, because they have been, in the last few quarters, they have been knocking the cover off the ball. And so that expectation, when you just do okay or come in line, looks like not a beat.
In terms of the consumer, Walgreens was out with a disappointing consumer environment forecast or characterization, and the shares in the pre-market are down like almost a fifth, like absolutely decimated.
Correct.
More than. What's your view on the consumer? Because now I think everyone's pretty sure excess savings have been worked off. Consumer debt is definitely at an all-time high, and they continue to add, like everything they buy, certainly in the lower quintiles, is on plastic or borrowed.
Well, it's not absolutely everything, but as long as the consumer is employed, they should do okay. But it's definitely the consumer themselves are not a monolith. As we've seen, there's an increasing fraying of those at the top still doing okay, and those in the middle and elsewhere really seeing the pressure. They're being very picky how they're spending. Some are still hopping planes to go see Taylor Swift overseas.
Good point.
So
Good
there's
point.
some of the services spending that's still really strong. You've got movie releases that were out, especially family-oriented movie releases that are breaking box office records. So stuff's still happening, but they're being very discerning about how they're doing it, and they're definitely pushing back on those consumer companies, saying, don't be handing me any more price increases.
So it's that nuance that I think is important, right? I tend to think in black and white binary, but when I see higher end consumers going to Walmart rather than
Right.
maybe upscale
And
to
buying
Chico's.
house brands.
Exactly. They've already put in their pools, so they don't need to put in a pool anymore. They're
Right.
not buying Winnebago RVs. The pandemic is definitely
Right.
over, but you're still seeing them spend. I mean, luxury brands are still good investments.
Well, as long as you're seeing the labor market in balance and we haven't got layoffs, people are concerned. They're not necessarily, the quits rate isn't as high as it was a year or two ago. And so people are just saying, I'm going to stay in my sphere and stay in my zone and try to spend a little less than I earn.
One of the first Wall Street adages, one of the first Wall Street cliches I learned when I was an intern at Tucker Anthony 25 years ago: buy the rumor, sell the news. We're just around the corner from earnings season. Do you buy the rumor now? June is typically a bad month. July is typically a good month for stocks. Do you load up on risk a little bit heading into earnings season?
Not well. We tend to think longer term than that, and we wouldn't necessarily write off this earnings season. We actually think, similar to the last couple, that it'll come in a little stronger than expectations are going in. But it's going to be very discerning. Investors will be as discerning as consumers are. And they're going to do what you've seen. You're going to have to beat by a lot. You're going to have to do shareholder-oriented, friendly things like buybacks and dividend increases and stock splits and things like that. But they're going to take it on a case-by-case basis. So one could make the argument that it's a great market for active managers.
It's interesting because the last 15 years have not been, right?
Exactly.
I mean,
exactly.
All you had to do for the last decade and a half was buy an index fund, and you beat literally everyone else except for, I think, one, PIMCO, asset allocation fund. That starts now, you think?
Well, it's definitely. I mean, one of the early adages I had in my career was summer doldrums, and I haven't seen those for a long time either. As we were referencing earlier, all the data that's coming in, earnings that's coming, you're definitely going to want to be on your toes. And we definitely think people should stay invested.
Nowhere except for the VIX, right? I thought it was interesting. I was looking at that Goldman Sachs story today. Their prime brokerage says hedge funds are selling tech stocks aggressively. We look back and see the most tech selling from hedge funds since the data started. We started collecting the data in 2017. NVIDIA obviously has been, it wiped off $430 billion in market cap in like 3 trading sessions. It's insane that the VIX is still down below 12 and 13. Right. Where's that complacency coming from?
I think a piece of it is you've got a lot of different players in there trying to position themselves. You've also got the end of the quarter on tomorrow. So
window dressing.
So window dressing going on and hoping that you get a pullback so you can turn around and reestablish those positions going into there. So the complacency, though, in watching the VIX, I've taught people over the years to watch VIX, but it really has had a lot less applicability, if you will, in recent days. And it's only at those really hyper turning points like March of 2020 or the Silicon Valley bank blow up last spring where all of a sudden everyone pays attention to VIX and then minds and focuses elsewhere.
Right, it's only important in times of trouble, not when the S&P is just steadily marching higher
exactly.
and higher and higher.
So it's not giving us much guidance. When the markets are trending, it's more important to keep focused on fundamentals and what's undergirding that uptrend and if it's sustainable.
All right, some good intel there, Carol. Thank you so much for joining us. I hope I can have you back. Carol Schleif there from BMO Family Office. Joining us now with a look at some of the individual stocks. Moving ahead of the opening bell, here's Abigail Doolittle. Abby?
Well, the big decliner of the day, of course, or the one that is getting a lot of notice. Let's take a look at the shares of Micron, because at this point they are down. They're off the lows, actually, down less than 5%. And this, of course, after they put up a solid beat of the quarter that was, but relative to the fiscal fourth quarter, the guide just a little bit disappointing. But to the point you were making earlier, Matt, the midpoint is basically being met. But because there are some analysts estimating $8 billion of revenue, and they're looking at 7.4 to a range of $7.8 billion. Some seeing that as a miss, especially for a stock up 67% year to date. Now, we do have some other big laggards on the day, starting off with the shares of International Paper. They are down after Suzano, the Brazilian company, is walking away from a possible, what had been a potential buy of International Paper, saying they reached their maximum buy price. They're not going any higher. International Paper, on the other hand, is saying they are still on track to buy DS Smith. Those shares down sharply. Also down significantly, Levi Strauss down 16.3% into today, up 40% year to date. They missed the revenue estimate just slightly. They're also leaving the fiscal year guide untouched, and apparently wholesale a little bit weak. Net investors not liking that on a stock up so much. The one that's really down at this point, though, Walgreens down 21%. Yeah, really pretty stunning there. An EPS miss of 7.4%. Revenues did beat, but they cut the outlook. Company pointing to consumer challenges. We'll be speaking more on that one on the open, Matt.
Yeah. fascinating and massive drop, Abigail. I mean, losing a fifth of its value, at least in the pre-market. We'll see how it trades when the market's open in just 15 more minutes. Abigail Doolittle will be back with us later on in the program. Coming up, Biden and Trump go head-to-head.
During the previous administration, my predecessor made promises which he broke more than kept.
Now under crooked Joe Biden, the world is in flames.
My predecessor failed the most basic presidential duty.
I just want to debate this guy.
We go live to Atlanta on what to expect from tonight's debate next. This is Bloomberg.
During the previous administration, my predecessor made promises which he broke more than kept.
Now under crooked Joe Biden, the worst president in the history of our country, the world is in flames.
President, my predecessor, failed the most basic presidential duty.
He's not getting the job done for America. He is incompetent, ladies and gentlemen.
I'm a grown man running against a 6-year-old.
I just want to debate this guy.
After arguably years of finger pointing between the two candidates, President Biden and former President Trump are finally facing off, we think, as of now, in the flesh in the first debate of the 2024 election. Joining us now on the ground in Atlanta is Bloomberg's David Gura, host of the Big Take podcast. David, I guess the first question is, will Donald Trump actually show up and do this? And then we'll talk about what the debate topics are going to be.
The former president is in town, so it seems likely he is going to be on stage at that TV studio tonight. He has in recent weeks, of course, cast a lot of doubt on the way that this debate is going to be structured, what the rules are going to be. I will note, Matt, he and his campaign agreed to all of the rules that have been laid out by CNN and agreed to by both campaigns. But he's in town. Yes, I think it's likely that he will be on stage with Joe Biden tonight.
Yeah, I mean, just last night in a barber shop, apparently, he was saying he hopes CNN gets bad ratings, which I don't understand because he's one of the stars of the program. Are they going to talk about substantive policy? Are there going to be serious discussions about taxes, about spending, immigration, abortion?
I think that we're going to see a valiant effort on the part of these two moderators, on Jake Tapper and Dana Bash's part, to try to get the candidates to address some of these issues. But it's hard to see through the questions about style to get to that substance. I think that's the main issue here. There's been a lot of talk about the age of these two candidates, how they're going to comport themselves, how they're going to interact when, as you say, they're in the flesh with one another on this stage. So I think that, by and large, is what most people are going to be watching this debate for. And then the degree to which we get some glimpse or clearer sense of what the different policy prescriptions are, that's some value add, but I don't think that it's going to be sort of what's driving viewership, certainly tonight when this debate takes place, Matt.
There have been times, for example, in the State of the Union speech, where President Biden has looked vigorous and strong. More often, however, he looks frail and has difficulty talking at a volume that everyone can hear. What does he have to do tonight to appeal to voters?
It's funny, the bar has been set low by the Trump campaign, and I think that that's a thing that the Biden campaign has really embraced. You mentioned that State of the Union address. It was a slam dunk, a home run, whatever sports metaphor you want to use for the sitting president, and that he did that with aplomb. I think it's interesting that the Trump campaign has sort of reevaluated how low they've placed that bar in recent days. I think because they realize he has been able to clear it in the past and is likely to do so. But this is novel territory here. You have a septuagenarian, a guy who's 78, running against a guy who's 81. These are both men of some advanced age. We'll see how sort of salient that issue of age is during the course of this debate, how much it comes up literally or how much it's just something that's read into. But it certainly is one of the backdrops to the conversation, the debate that's going to happen tonight.
President Trump has bragged that he could shoot somebody on Fifth Avenue and, his supporters would still vote for him. We've, in a sense, seen that, right? After he was convicted of multiple felonies, he raised more money than ever before. Does he have to behave tonight? Does it matter?
We have all become used to the way that he does behave as a politician, and I think that that's something that he's really going to exploit tonight. He's continued to exploit over the course of this campaign. you look at how these two candidates have prepped for this debate. Joe Biden has hunkered down at Camp David and done it in a very traditional manner. He's looked at briefing books. He's done mock debates. Donald Trump hasn't done that. He's sort of flouted that. So I think we're going to see a kind of continuation of that. There is this facet, this rule that the microphones can be muted by the moderators. And when you look back at the last two debates these candidates have had, there were all of these verbal interjections that took place. They're really kind of the signal moments, the things that we remember from those debates. Either they'll be inaudible tonight or difficult to hear if one microphone is silenced, but it's certainly going to change kind of the tenor of it.
That'll be fascinating. Also, I'm interested to know who Donald Trump will choose as his running mate. I thought we might get that announcement before the debate. I suppose there's still time, right? About 10 hours, I think. CNN has got a countdown clock running already.
Countdown clock, yes. They've teased this, and there will be a viewing party tonight that Kelly Loeffler, who is the former senator from Georgia, is hosting at her home in Georgia. And those four kind of front runners or finalists for that VP nomination are all going to be there. They're going to act as surrogates right after the debate, and then they'll be at that viewing party. So it is something that he has teased in recent days, that announcement could be coming sooner rather than later. I guess that's another thing that we'll have to wait and see if anything materializes on that front tonight as well, Matt.
David, very much looking forward to it. I'll be tuning in for your coverage tonight live out of Atlanta. You, too, our dear viewer, can tune in to Bloomberg Television. You can listen to Bloomberg Radio for all the build-up and the post-game analysis, as well as simulcast coverage of the CNN presidential debate tonight at 8 p.m. Eastern. Coming up, they're counting down to that. We're counting down to the Open. Just about 7 minutes to go. We're going to give you the morning calls from the big banks. And then later, Lee Ferridge, State Street Global Markets head of multi-asset strategy, joins us to tell us why he's looking for fresh all-time highs in the S&P and the NASDAQ before the end of summer. This is Bloomberg. Time now for our morning calls. Look at some of the analyst recommendations on Wall Street this morning. First up is CIBC, raising BlackBerry to a sector outperform. That's right, that company still exists. It's a Canadian software security company now, reporting first quarter revenues that beat estimates. Next up, KBW is raising its recommendation on Bank of New York Mellon to an outperform. KBW says the bank has firm control on its expenses and expects more profitability relative to peers. And then finally, JP Morgan is cutting its rating on U.S. Bancorp to a neutral in the wake of the annual Fed stress tests. The analyst highlights the bank had among the highest loss rates for credit cards under the test scenario. So we'll see how that goes when we get the results. Coming up, Lee Ferridge, State Street Global Markets head of multi-asset strategy, on why he thinks areas of inflation could actually start to move higher. This is the countdown to the Open. I'm Matt Miller. Moments away from the start of trading, investors are going to want to gauge whether the AI revolution starts now for companies other than NVIDIA or later, after Micron came out with maybe disappointing and a disappointing outlook. That's driven futures down, only off about 0.1%. NASDAQ futures down about 0.1%. There you hear the bells ringing. Webtoon on the NASDAQ, I guess cashing in on the kids' appetite for manga or anime. Not quite sure what it is. And then Grindr ringing the bell on the New York Stock Exchange. We know what they do. Let's check out some of the other asset classes that we're watching. Euro dollar right now, 107. So actually not taking such a huge hit from the snap election call that Micron gave us a couple of weeks ago. You know, we've been down to 106. We were up at 108, and we're kind of hanging out right there in the middle. The 10-year at 429, so yields that were up yesterday coming down a little bit today, and crude that was down yesterday coming back up a little bit today at 81.62. One of the stocks that we're watching closely at the Open is Walgreens, down hard after reporting its latest results this morning. Bloomberg's Abigail Doolittle joins us to talk about what's going on with Walgreens Boots Alliance.
Well, Matt, relative to the stock, down more than 20%, heading to its worst day ever as a publicly traded company, going all the way back to 1980. That is the degree of selling pressure, and that stands out only because the stock is down 85% from its 2015 peak. So investors clearly not happy. Now, what happened was they missed earnings by about 7.4%. It is the guide, though, the guide disappointing for a second quarter in a row. They cut it below what was expected. And this comes after last year's announced $1 billion cost cuts, working to boost free cash flow. Clearly, it hasn't taken a hold yet, the turnaround plan. So I think that that's a big reason why shares are selling off so much. Now, they are talking about making more organizational changes, including store closures. It's not clear what the others are. They're not talking about how many stores. They are saying that those store closures will happen over the next 3 years. It's interesting because on the conference call for analysts and investors, the CEO, Wentworth, committed to investing in Boots prior to now. They had, of course, been talking about the possibility of spinning out that UK piece in an IPO or exiting the business in some other way. But now, again, the CEO committing to working more with that Boots. They're trying to move away, in addition, from the retail space. Their Village MD business outperformed. But the biggest thing, in some ways, on top of all of this, they talked about a worse, quote unquote, worse than expected consumer. So tough going here for Walgreens Boots Alliance, down 19%, worst day ever, going back more than 30 years.
The consumer, Abigail, really in focus. We have a story out on the Bloomberg today pointing out that the $2 trillion in excess savings built up during the pandemic has been completely wiped out at this point, and credit card debt continues to go higher as interest rates stay high.
Yeah, that's not a good formula at all for people who have gone through that savings and are working through credit now in terms of excess money for whether the other day we were talking about pools and Winnebagos. That would be for the high-end consumer. But for the average American, if we don't have that spending power going into the economy, that's something to think about. About 2/3 of the economy, of course, is the consumer. So this data point here and that story on the terminal in terms of not having that savings and really having to move toward credit, something that I personally try to stay away from, but not always successfully, may again not be a good formula going forward.
Sometimes you got to find an extra couple $1,000s for those Taylor Swift tickets, right? And I guess they're going on plastic. Abigail, thanks very much for that. Levi's shares sink to a record, I should say, at the open as well. Bloomberg's Natalia Knijevich joins us for more. Did I get that right? They sink at the open to. It's the biggest drop that we've seen in Levi's.
They were down on pre-market by 18%. Now they're down by 15%. It's really interesting because sales missed just slightly. At the same time, EPS came above expectations. Maybe expectations for this earnings report were too high. The stock is up by 40% year to date. Last time when the company reported earnings, they increased guidance for EPS. This time around, they didn't change guidance, and wholesale business is down globally by 4%. And it represents about 40% of companies' revenue. Citi analysts are saying that this department, this type of business revenue segment is holding the company back. At the same time, direct-to-consumer sales are growing really quickly globally. They are up about 11%. What's really interesting is that Levi's products, only about 40% or less are for women, but this category is growing much faster than products for men. So women's department increased by 20% during the past quarter, but sales for men's products are up just by mid-single digits. And Matt, this is really important. Denim is a huge fashion trend for 2024, and not just jeans, it's top to bottom. And Levi's is saying that sales of those outfits...
Oh, the Jay Leno thing.
Exactly.
Denim shirt. And, you know, when I was a kid, Natalia, Levi's was kind of the only thing out there. I mean, if you're going to try and save money, maybe you would go with Lee or Wranglers if you're kind of on the farm. But for most people, it was 501s. And now there's so many other choices in that segment. It's so crowded.
Exactly. But I have to say, when I came to the U.S., the first purchase I've made was a pair of Levi's jeans.
Good for you. That's very American. Got some Levi's jeans, went to a Yankees game. Had some apple pie.
Not.
No?
That's my next goal.
Just the jeans. Okay, we'll take you to the game. Natalia Knijevich, thank you so much for that. Micron, really, I think the big earnings story, failing to live up to lofty expectations of at least some analysts, definitely of the AI big bulls in their latest report. Bloomberg's Isabel Lee joins us for more on Micron. Isabel?
Hey, Matt, it's really all about the lofty expectations. Day in and day out, investors are looking for that big payout. And Micron is one of those, the latest, that investors aren't really happy with. We have shares falling around 6%. The company reported fourth quarter sales to be around $7.4 billion to $7.8 billion. So this is well below analyst estimates. In fact, some analysts were expecting $8 billion. We have profits, though, slightly higher than expected. It's $1.08 a share versus the $1.02 estimate. So the thing is, yes, Micron is getting a boost from the whole AI mania we're seeing, but sales are still sluggish, especially when it comes to PC and their smartphones. So those are only beginning to see the recovery from last year's historic slump. So lots of eyes are on Micron. It is, after all, the largest U.S. maker of computer chips. But still, it has been one of the biggest beneficiaries of AI. It's up around 70% year to date. But this is just a fresh reminder, Matt, of how vulnerable this AI rally is. In fact, some are calling it to be a bubble because this comes just days after NVIDIA wiped out around $500 billion in market value. But we do have the CEO reiterating that 2024 will see a recovery and 2025 will see record sales. So you see that optimism still is there, Matt.
Yeah, a very interesting roller coaster ride to follow indeed. Isabel, thanks very much. Bloomberg's Isabel Lee talking to us about Micron and the AI craze that's given up the ghost a little bit in the past few trading sessions. Will that continue today? Joining us to talk about it is Lee Ferridge, State Street Global Markets Head of Multi-Asset Strategy. And Lee, of course, we're going to talk about a lot of other stuff as well, not just AI. But you can't ignore what some have called the most important stock in the world. That's NVIDIA. The others that, you know, have gained on the AI craze, hardware and software, data centers, energy producers. What do you think about all of this? Is it here to stay, or is it like the dot-com bubble where, you know, we're using the internet for sure, but the stocks are just overvalued and need to retrace some of their gains?
The difference between now and the dot-com bubble is the companies now, they're making money. If you think back to the dot-com era, those companies weren't making money. They didn't make money for years. The ones that survived are now very successful and very big companies. The ones we're talking about now with AI, they're making money, they're printing money every day. So there is a big difference. Look, valuations are stretched, we know that, but it's sort of, we don't know how big this thing can be. And until we do, then I think, you know, these stocks are going to find support. Whenever you get any dips, you're going to see buyers come in because the longer-term trend is still in favor of the AI revolution.
It's a good point. A lot of people have been saying, you know, investors were waiting for an entry, and if you loft off $430 billion from NVIDIA, that sure looks like one to me. Although we heard from Goldman Sachs that hedge funds were selling tech aggressively, retail investors were piling into the ETFs. Is it a little bit scary when the smart money is selling?
Depends which you define as the smart money.
I know.
It is, but I mean, I think, again, the valuation argument has become very strong for them in terms of, you know, this is overvalued. They've had a very good run. But as I say, there are still some very, very successful investors who are still buying these stocks, and I think will continue to buy. So I'm not that worried about it. Even if the stock market generally comes down, I think you're going to see these AI-related stocks still outperform. Demand for their product is pretty inelastic, even in an economic slowdown. Everyone wants to be in this market. So, you know, they've got huge cash piles, so higher for longer run rates. They're going to make money on their interest. So, you know, they're insulated from a large degree from the economy. So I think they're going to continue to outperform.
I was listening yesterday to Masters in Business, great podcast that Barry Ritholtz does. And last year he was talking to Tom Wagner about the early 2000s when telecoms were laying down fiber for like thousands of dollars on the mile. And eventually, they sold that for pennies on the dollar, right? But thank goodness that capacity was there because the internet needed it. Is that what we're seeing now, you think, in memory or some of the other picks and shovels that are needed for AI?
In terms of putting the groundwork in for what we need? Yes. Yeah. I mean, I think that's exactly what we're seeing.
Paying way too much to put the groundwork in. Are investors, you know, a little bit exuberant here?
There will be pockets of exuberance. There will be companies that don't survive. There will be those that don't turn a profit to the degree that people expect. But then, you know, you will have companies that the Amazons of this world and others that are hugely successful over the longer term. And it's a question, you're not going to pick all the winners.
Yep.
but you want to have a bunch of them so that if you get the winners, they're going to really offset anything you lose on, quite honestly.
Good point. We were talking about you coming on earlier and saying you think we're going to hit new records in the stock market, but you also think that inflation has some upside risk. You know, something we heard from Mickey Bowman as well a couple times in the past few days. How do you square that circle? I mean, if inflation has upside risk, doesn't that mean less likelihood of cuts and, you know, more pain for the stock market?
It's a timing thing.
Yeah.
My call for fresh all-time highs is in the next month or two. So July and August, I think we're going to have a very quiet summer. We'll be interspersed with volatility around the French election or anything political here. But overall, what the Fed has done, they've told us they're not doing anything until September. Right, so the July meeting is a dead rubber now. That's 3 months away. We have 3 rounds of data before then. The market's not going to be spooked by anything over the next month or so, I don't think. We have ample liquidity. We have investors who want to buy. That's going to mean, you know, the drift higher in the market that we've seen for so long. There's no reason for it to come to an end over, you know, during the course of July and probably August.
You're the second person on this program to call summer doldrums.
Yes.
And, you know, I look at, there's a function on the Bloomberg SEAG, which is a seasonality chart, and I look at that for the S&P 500, and I see going over the last 10 years, the last 20 years, July is a great month for stocks. Does that continue?
This month, I think it does. Yeah, as I say, you know, there's nothing to upset the positive mood around the Fed. We're not going to change our view on the Fed before we get to September. Really, the market's going to sit between 1 cut, maybe 2. You know, you're seeing very narrow ranges on 2-year yields. You're seeing very narrow ranges on 10 years. And that sort of stability in the rates market is great for stocks. So, yeah, I do think we're going to have a good July. Maybe not as good as some of the ones in the past, but I think...
It's been... I'm looking at the screen now.
Yeah.
Last year, we were up 3.1% in July. In 2022, 9.1%. The year before that, 2.3%. The year before that, 5.5%. We haven't had a down month in July since 2014.
Yeah. I mean, they're thin markets. There's less volume that goes through. But 3% this July, easily achievable. Yeah, I don't think we'll get 9, but I think 3% is easily achievable, which takes us back to new all-time highs.
What do you think about the divergence that, you know, yesterday the dollar hit a fresh high for 2024, and the talk is of, you know, if the Fed doesn't cut rates until, as you said, September, and a lot of people are saying even later.
I don't think they'll cut in September. I just don't, we won't see anything in terms of changes in view on the Fed until the September meeting.
When do you think they're going to cut?
I'm not convinced they are this year, quite honestly, because as you mentioned before, I am of the opinion that there are upside risks to inflation in the second half of this year. I think the labour market is still tight. I know you're seeing some weakness around the edges, but look, we have a labour force problem. We have a shortage of workers. It's demographics. Baby boomers are retiring. We're not replenishing the workforce to the greater degree. So that's why we have a shortage of workers. That keeps wage inflation high. Housing market, we have an inventory problem. You know, 50% of mortgages in the US are 3% or less 30-year fixed. The average outstanding mortgage rate is 4%. No one's moving. No. You're not going to move and get a 7.5%, 8% mortgage. Exactly. So there's no inventory, and that's supporting house prices. So this idea that we're going to see the shelter component of CPI come down in the second half of the year, I think the risk is that actually starts to move back up. If you look at it, lags house prices by about 12 months, and house prices bottomed last May and have been moving up since then. So those factors, to me, the risk is that pushes inflation higher, not lower.
And keeps the Fed standing pat. And do you see that divergence then? You know, the ECB wants to cut. The BOE wants to cut. Do you see that divergence really offering opportunity?
I do, because if you look at the market, you look at the rates market, 1-year pricing, we're basically pricing the same amount of cuts for the Fed as we are the ECB, the Bank of Canada, slightly less for the Bank of England. So the market's got about 4 cuts in over the next year for all of them. Mm-hmm. That doesn't make any sense to me. When you look at US growth, close to 3%, you look at Europe, you look at the UK, close to 0%, I can see why they're cutting. They've still got high wage inflation. They've got a demographic problem as well, but they're growing below trend. So that, by definition, creates slack in the economy. They can look ahead a couple of years and say, that's going to raise the unemployment rate, that's going to bring down inflation. The Fed isn't there yet. We're still growing above trend. And the problem with that is that means you can't cut rates. And confidently, and they keep saying being confident, that inflation will come lower to their 2% target.
Absolutely. Great conversation, Lee. Thanks so much for coming in. Really appreciate it. Lee Ferridge there from State Street. Coming up, Micron fails to live up to some of the loftier expectations.
I was expecting things like slightly below consensus in the near term. But I expect next year to look much better than what most analysts forecast.
We'll take a closer look at the chip maker next. This is Bloomberg.
I was expecting things like slightly below consensus in the near term, but I expect next year to look much better than what most analysts forecast for Micron. So it's just a game of being patient 1 or 2 more quarters.
Micron is selling off this morning after failing to meet Wall Street's higher expectations. Some investors were expecting a bigger payoff from the AI mania that has swept the market. But it's fair to say that Micron actually met the average estimates. They forecast sales between $7.4 and $7.8 billion, and the average estimate was for $7.58. They showed earnings in their forecast of 108 a share, and the average was for 102. So why are they off 5%? Let's ask Bloomberg Technology co-host Ed Ludlow. He is in San Francisco. And Ed, I guess the idea is you just have to be an NVIDIA right now. You just have to really beat expectations by a mile.
It's really interesting because in many ways the fate of NVIDIA and it ramping up the sort of deployment of its new products directly correlates to Micron. Because if you think about a server, you have trays of components. And in one tray, you have the GPU or AI accelerator from NVIDIA, in the first instance, the H200. And around that H200, you have 8 of Micron's HBM3E, high bandwidth memory chips. And so like when you think about the big picture of what's just happened, the investors are kind of looking at the numbers and saying, we thought it would be more quickly. But in their defense, Sanjay Mehrotra, the CEO, did actually give us more data than I've seen him ever give before in how that product is ramping up and what revenue is going to be this quarter, the current period, moving into the next fiscal year.
By the way, I kicked off my career here at Bloomberg about 25 years ago as a tech reporter, a print reporter, covering Micron as a maker of DRAM, which is like a commoditized version of memory. You've schooled me recently in the new, which is high bandwidth memory. Talk to us about the products.
So high bandwidth memory is basically DRAM in multi-layered form. Think of it as a cube. If DRAM, which is about 3 gigabytes of memory, is a thin square, you stack in the first instant 8 of them on top of each other. 8 times 3, 24, you get 24 gigabytes of memory. And high bandwidth memory is really important in the AI context because when you're training a large language model, how quickly you can access a pool of data directly correlates to how good that large language model is. In other words, the latency of calling on the data and getting a result both in the training and inference side impacts performance. The design of stacking DRAM one on top of the other just makes it very quick. It reduces latency, and you can get data in higher volumes instantaneously. And it's a competitive market. Micron's done really well to get in with NVIDIA and sort of partner themselves in the H200 product. But SK Hynix is doing really well in that field too. In fact, the laggard is probably Samsung. But all three of them are gunning for this market, and whoever comes out on top, you know, it's not as commoditized or cyclical as historically DRAM is in the context of mobile phones or personal computers, things like that.
All right, Ed, I'm going to keep watching your show so I don't have to research this stuff myself. Bloomberg Technology co-host Ed Ludlow, he co-anchors that show with Caroline Hyde, starts at 11 a.m., a show that you don't want to miss if you care about participating in the revolution. Now, for some of the sector price action that we're watching this morning, let's get to Bloomberg's Abigail Doolittle. Abby, what do you see?
Another really interesting sector day from the standpoint that we have the S&P 500 down fractionally at this point, probably trying to flip higher, but most sectors are lower. Financials down 0.4%, even as all the big banks pass the Fed stress test, materials, healthcare, but small losses. To the upside, though, communication services, of course, one of those mega cap tech sectors, energy and real estate. If we take a look at the banks after those stress tests over the last couple of days, we are seeing a bit of a decline here, down about 2%. That KBW Bank Index down 2% over the last 3 days, Matt.
All right, Abigail Doolittle, thanks very much. Coming up, we're going to give you the market-moving events that you need to be watching this week. You can bet inflation is one of those. That's next in our trading diary. This is Bloomberg. Here's what you need to be watching this week. We're going to get pending home sales at the top of the hour, so type EcoGo for that. Then a Treasury auction on $44 billion of 7-year notes this afternoon, plus Nike reporting earnings after the bell. Tonight brings the first debate between President Joe Biden and former President Donald Trump. And then we'll round out this week with the all-important inflation reading. The Fed's preferred gauge, PCE, comes out tomorrow. It's one that you don't want to miss. This has been the Countdown to the Open. I'm Matt Miller. This is Bloomberg.